Morning, everyone. Welcome to this morning's edition of the NBC Markets Morning Call. Same old story, chip-led rally. Led the market higher overnight. Investors just completely shrugging off Iran markets, Iran strikes, etc. And I think 7 of the 11 sectors were up in the S&P, but as you can see, it's those regular regular green spots on the market map. Micron, AMD, Broadcom, Meta actually headed a little bit higher as they were talking about renting out. Basically, Mark Zuckerberg said that they're getting offered ridiculous amounts of money to rent out their capacity, and while they do need more capacity, obviously there is always a price for everything. So we had oil prices drift off a little bit as well overnight, but this is despite the fact that the US has struck 170 targets in the last 3 days, as well as 60 plus IRGC boats, and Iran's retaliated with strikes on Kuwait and Bahrain. And Iran, called it a little while ago. They want a deal, blah blah blah. They clearly don't want a deal because they clearly keep striking, and Iran was the one that sort of kicked this off again. Not that they'll probably say that, but that's what the Western media was pricing. So I'm a little bit confused by this move. Apparently, leverage levels are going through the roof here at the moment as well, and we had margin lending really spiral out of control to the upside. So people are trying to obviously maintain these moves, but and then I think we had the chip sector very much buoyed by the fact that SK Hynix priced their US ADR at 149 a share. They raised $26.5 billion, which is the largest sort of foreign IPO or IPO-like, style deal in history. And there was another reason that Meta was up they were also saying that they're launching their own chip production starting in September, and they're going to double their compute to 14 gigawatts next year. And they also launched Muse Spark 1.1. It's a million token context window, agentic model, paid API tier, the whole works. And Micron announced that they were lifting lifting US investment to $250 billion from through to 2035. So lifting by $50 billion there, but I mean to 2035, like that just reeks of a company basically. That's an announcement for announcement's sake, or the market paying attention. It's not bullish, and global memory monthly sales hit a monthly record of $74 billion. And that was UBS July memory monthly was the source of that one. Soaring memory and compute costs are definitely a headwind, according to OpenAI's Sam Altman. He's already in financial pickle, I suppose, because he's not getting the growth that the rest of them are getting. And you've got the likes of Cursor and SpaceX AI or XAI launching, and Cursor's supposedly one of the best bits of software out there for the dev guys. Really having a crack at that enterprise part. So Anthropic and SpaceX or XAI, because they are one and the same, they're very good on, Anthropic, obviously, their run rates through the roof. They're renting off Elon. Elon's very good at infrastructure. He's, world-class, if not best in history, kind of engineer for this, in this sort of field, in this innovation field. He's both very commercial from an engineering point, but, he's a businessman. He's a great thinker. As much as everyone doesn't particularly like him, he genuinely is the best guy to be running some form of infrastructure project. Sam Altman, not so much. And, by their CFO's own admission, they need a lot more customers. So the Philadelphia Semiconductor Index rose another 5% over the last 2 sessions, and it had a 14% slide. And so, look, overall, I would say that I think this is just still hot money washing around the system at the moment. I don't think there's necessarily any clear direction. We've got earnings coming up in the next couple of days, next couple of weeks. Sorry. I would imagine that there is, I couldn't be long up here. That's for sure. So no matter how good these thematics are, there's dramatic concerns around credit. There's from the hyperscalers now, who are now fairly heavily indebted. I'm sure they'll be fine, but like they're starting, the bid to cover ratios are starting to to peter out, and those bond issuances and things from from the likes of Amazon the other night. The monetization is not really coming through. Costs are just absolutely skyrocketing because there's just a shortage of everything. And they're all starting to have to do new projects, and they're even sort of addressing the copper issue, which a lot of the major hyperscaler heads have been talking about for quite some time, even before AI was kind of really exploded. And they're all talking about these fiber optics and photonics companies that they're going to have to go in because they foresee just a dramatic shortage of copper. So then you've got raw materials, you've got compute, you've got memory, you've got power. Like how many bottlenecks are we going to get to before this becomes and a lack of monetization of the actual end product? This is adding up to be a bit of a disaster. And I think those who are, and for those of you who know me, I'm not a mad fan of Apple generally, but they're starting to look pretty smart, not just not just throwing money at something and sort of waiting to see how it plays out, because there's just, these commitments are just incredible. And a billion has become nothing all of a sudden, and $1 trillion is just now the new number. And that's inflationary, and then that means we're going to have bond yields up here, and then you've got Donald Trump still and Iran still going, and then there was a report from Reuters overnight that from sources inside the Kremlin that Putin's going to escalate the Ukraine war in the next couple of months. So I don't know where this optimism in the US market is coming from, but it is blind. There really is only so much the market can take, and we've got oil prices back above, and I have concerns around this earnings season coming up, I've got to say, because the buzz around AI is starting to meet reality a little bit, and I think what used to drive the market higher, like increased capex, is probably going to end up being a possible negative, because investors are getting concerned broadly, and I think the ones that have been rewarded I think the ones that show fiscal discipline will be the ones that get rewarded in the long run over this earnings season coming up. Because look, revenue and EPS is still going to be great. The US analysts, it's a joke. Like basically everyone beats. If you don't beat, you're an absolute idiot essentially, because they all set those things really low. I would say we will start to see the reality of just this blitzkrieg of spending hit reality, and then obviously it's inflationary as well, and it's creeping into the industrial sector, everything from concrete to aluminium to copper to labor shortages to power to everything. Inflation is nowhere near what the Fed's reporting. It is definitely higher, and those CPI and PPI numbers are a bit of a joke overall, considering we've had the small uplift that we've had in inflation, and the enormous uplift we've had in energy and raw commodities and everything cost. Everyone's forgotten about the tariff effects as well. Those inflation numbers are just an absolute joke. So Kevin Warsh actually did, and in a bit of a minor bit of hope, he's pulled together his 5 task forces overnight as well, and he's got some really heavy, big heavy hitters. We've got Reserve Bank of India ex-governor, Reserve Bank of England, also the Bank of England governor. you've got a guy from Anthropic, one of the head guys there as well, and like this, the lineups were super impressive, and not just like government PhDs and things like that. And they're going to cover all sorts of things like communications, because they want to streamline that. They don't want to just be doing those press conferences and things. Obviously, the balance sheet, which is just out of control. Their data sources, which were just sort of covered then in terms of realistic CPI numbers. Productivity and AI and inflation frameworks are two other separate ones, separately, productivity/AI and inflation frameworks. Because inflation's not good. It's the worst thing broadly for an economy, and you'd sort of get with those, you're reducing your standard of living and of your citizenship. I mean, there's going to be government backlash. So that's I've got to say it's a solid start, and I've quite liked what he's done so far. But there have been a few reactions from, they've already got an army of PhDs at the Fed, and a lot of these areas have been investigated. But I do like that they've brought in, they've brought in people from the private sector. I don't think there's probably enough of that. Because you really do need to have someone with a real world lens. Economists are, theoretical is not necessarily the best thing. So next week we've got CPI on the Tuesday and PPI on the Wednesday. I'm assuming they'll be a joke, or they'll be, even if they're high, they probably just add in reality another 1%. I get a big lineup of banks on the Tuesday. On top of JP Morgan Chase and Bank of America, you've also got Wells Fargo, you've got Goldman Sachs. I think there's 5 banks on that day. Morgan Stanley the next day. You got TSMC, which will be during the day, on Thursday towards our afternoon. BHP's got a quarterly update, I believe. United Health is making a nice comeback. We'll see if that sticks. And then you got Netflix, first of the what's up, the old Mag 7, I suppose. It's not probably, no one's come up with a catchier name yet, so we still have to use that. In line with those concerns, and due to the demand from the last campaign we did with this, we've got we've got buy the dip in the S&P 500 index. It's a 3-year investment. Essentially, the strategy has what's called a look back, and essentially you get to via the strategy buy a weekly dip, the weekly low between now and November. So if you want to have a bit of a look at that, it was extremely popular, and we had a record number of first-time investors in structured investments have a crack at this last time. It's very capital efficient, sort of uses options to buy call options, and is very, with all the concerns around the market at the moment. My concerns, I think we are potentially in for a 20% pullback at some juncture over the next 6 months. It's been incredibly reliable, that dip leading into midterm elections. Although, if we were ever going to break an 86-year trend, it's probably going to be with the Trump administration, because the guy basically announces stuff to prop up the stock market, and he's actually admitted it. So, and he's admitted that his family, of course, they're aware of what he's doing and what he's announcing. So, I'm pretty sure the founding fathers were not really thinking about, someone with, taking advantage of being the president from a commercial and personal wealth aspect when they wrote the Constitution. But, that's another discussion. We've got Kai and I will be doing the podcast this afternoon. Bulls versus Bears will be out around about 6 p.m. this evening. You can listen to it over the weekend. We're usually around about 40 odd minutes. We did the halftime report last week on just markets generally globally, and with Finjadel as well. And we did a bit of an ASX end of financial year wrap. This week, we're going to have a look at the risks leading into and how they're stacking up. I know that everyone's pretty, the US market just seems to be able to brush this stuff off, but, and while we just want to be, want to be a little bit clearer about why we think the market is pretty vulnerable here, and also go through a few stats about how quick the things turn around and how quick they bounce. But I don't think it's with Trump dominating the media and even managing to polish the turd, which is Iran and the US conflict. He managed to keep a lot of the solid information and stats out of the media essentially, and then everyone's just talking about chip stocks. It's a pretty good time to probably just pull back a little bit, and and you can decide whether you want to maintain or you want to hedge or you want to reduce or whatever. We're not always right either, but you should at least know the risks so you can make an informed decision. But that wraps it up for today, guys. We will speak again on Monday morning. If not, grab the podcast today and on all your favorite platforms. Thanks very much for listening. We'll speak again soon.